Hello folks, this is Daniel Taormina with FFP Wealth Management with an educational economic update for February 2019. In this month's video, I'll discuss some of the major headlines that influence markets in January. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. January 2019 is behind us, and what a difference a month makes. By the end of 2018, the S&P 500, Dow, and NASDAQ posted their largest annual declines in years. In fact, the S&P 500 and Dow experienced their worst December results since 1931. Fast forward a month, the momentum has swung in the opposite direction. The S&P 500 added 7.9% and the Dow was up 7.2%. These gains mean both indices had their best January performance in at least 30 years. The NASDAQ increased 9.2% last month, which was its best January since 2001. These gains occurred despite the longest government shutdown in history, continuing for much of the month. Why did these markets rebound in January? A few details helped change investor sentiment, including Federal Reserve comments and corporate earnings season. In December, concerns about how quickly the Fed was raising interest rates contributed to market declines. By January, however, Fed officials indicated several times that the central bank would begin taking a more dovish view. The Fed also chose not to raise rates after its most recent session, saying it would be patient when deciding on future increases. Market confidence grew, knowing that the Fed isn't rushing to hike rates again soon. Corporate earnings season also largely affected stock performance. By January's end, about half of the S&P 500 have released their fourth quarter results. The data reinforced that corporate growth had slowed later in 2018, offering no new surprise. Instead of driving market losses, however, January's earnings releases contributed to market growth. Why? This happened in part because a few solid reports from large companies helped ease investors' worries about a potential recession. In February, the remainder of corporate earnings season is ahead. Both global growth and the ongoing trade discussions between the U.S. and China may also remain on investors' minds. Further, we should receive some delayed data, which was postponed by the government shutdown, including the first reading of fourth quarter gross domestic product growth. In the weeks to come, we will be monitoring these and other details, and we look forward to sharing new perspectives with you as they arise. That's it for this month's economic update. Once again, this is Daniel Taormina with FFP Wealth Management, signing off for the month of February 2019. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 201-823-1030. We'd be happy to talk to you.
The following is the required disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended for investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. FFP Wealth Management is a branch office of TFS Securities Inc., a full-service broker-dealer located at 437 Newman Springs Road, Lincroft, New Jersey, 07738. Investment advisory services are offered through TFS Advisory Services, a division of TFS Securities Inc. This video is the property of FFP Wealth Management and should not be downloaded, shared, or otherwise disseminated without the express written permission of FFP Wealth Management. Thank you and have a super fantastic day.